Today's highlights. While coin prices are rising, the Sharpe ratio is showing an unusual slowdown in momentum. There are doubts about whether MicroStrategy might trigger a blow-up. Mainstream stablecoins are starting to surge. With so many focal points in the crypto market, where exactly is the support level below? Tuesday, January 6th. This is the BitcoinTV Chinese channel. Where is the coin Lotus? I'm Michael. Let's take a look at the most important crypto headlines and data from the past 24 hours. For those new to our channel, we help you sort through all the major Web3 news and events on a daily 24-hour basis. Especially the top headlines. We quickly help you get a complete grasp of the market sentiment, technicals, and news in the crypto space within 24 hours. So what exactly is happening in the crypto world? Let's look at today's data headlines. Over the past couple of days, Bitcoin seems to be slowly climbing from $92,000 to $95,000, right? The trading volume isn't bad either. As for Ethereum, it's hovering around $3,000, moving sideways. But the issue is that the one-year Sharpe ratio is still in negative territory. That's painful. This in itself is quite rare, and basically, this data is reminding everyone that the underlying structure of the market is changing. What should things look like under normal circumstances? In the latter half of a bull market, prices should rise both quickly and steadily. And the Sharpe ratio should keep rising. So what should the bottom of a bear market look like? Both price and Sharpe ratio volatility contract together, gradually repricing risk. But right now, prices are going up while the Sharpe ratio keeps dropping. What does that mean? It means the gains aren't efficient enough, and there's still more churning to come. So, this rally is mostly being supported by technical levels. Whenever people see a stop-loss level, they immediately bounce back into their positions. The back-and-forth movement is just being pushed along rather than being driven by a steady influx of new money, by genuinely new funds coming in to take over the positions. So right now, what does the overall market look like? The logic is starting to loosen, and we're in that transition period between the old trend losing steam and the new trend not yet established. The market is still searching for direction, but at this point, it's still unclear whether it should move up or continue downward. Alright, let's take another look. The bull-bear cycle indicator is now starting to drop from a high level, but it hasn't plunged straight into deep bear territory with negative values. Instead, it's more like it ran too fast and now needs to take a breather. This kind of indicator usually appears in the latter half of a bull market, or you could say at a rest stop in the middle. What does it mean for sentiment right now? It's cooling off and the structure is calming down. On the macro level, the liquidity tap has been tightened a bit, so leverage is slowing down. But everyone should know that the whales who hold long-term on-chain without any pain, their addresses are as steady as ever. Meanwhile, short-term traders are getting more and more anxious, and the more anxious they get, the harder it is to make money. So overall, this is a typical market consolidation phase. With prices fluctuating up and down, people are no longer as certain or as confident in the market direction as they used to be. So this stage is definitely a digestion and adjustment phase within the bull market, not a stage where the trend is completely reversed. However, until our weekly review signals that it's time to enter the market, every rebound is a good opportunity for you to reduce your positions. Let's take a look at Bitcoin's performance in January each year. Generally speaking, it's been quite decent. From 2021 to 2025, over these 4 years, the average monthly increase in January has been around 10%. The only exception was in 2022, which happened to be right at the start of the bear market. So January 2022 saw a pullback of about 17%. The logic behind this isn't complicated. In December, everyone is busy rebalancing their portfolios at the end of the year, institutions are dealing with taxes and taking holidays, so there are fewer people and less money in the market, making it very easy for prices to be pushed down. When January comes around, everyone is back at work, rebuilding their positions, and airdrops also make it convenient to add to their holdings. The New Year's capital starts gradually flowing back in and repositioning in the market. Those who are on vacation are also back at work, and the price of coins starts to recover as well. The number of active addresses on the blockchain steadily begins to rise in January too. So, while January doesn't guarantee a price increase, after the digestion period in December, it's much easier for both capital and sentiment to come together. As the market warms up, after we've organized the key headline data, it's time to dive into the most important industry news. So please like this video and turn on the notification bell. Why? Because if you don't have time for 15 minutes every day, we'll push the headline to you. Just a quick glance at the title will let you know what you absolutely need to be aware of in the past 24 hours. The news that's closest to your wallet and your profits, our material is more than enough. So for today's headline, let's focus on Michael Saylor. At the recent Asia and Middle East summits, Michael Saylor attended every event he was invited to, and every time he had something different to say. Why is the price of Bitcoin falling? Why is MicroStrategy incurring losses? Most of the capital from the West has already been raised, so now the second wave of hot money from Asia and the Middle East is expected to follow. That's why Michael Saylor has such high visibility. As for MicroStrategy, every move it makes is significant. The average cost of its holdings is around $74,000 per Bitcoin. This cost is the key position line everyone should pay attention to. In the last bear market, the big story was FTX. In this bear market, which unlucky player will be the first to blow up? That's why Michael is a benchmark that everyone must keep an eye on. During a market pullback, capital will reassess where to allocate funds next. So Michael's stock price and his moves both serve as a very important risk indicator for the crypto world going forward.
The company's latest disclosures show that due to the impact of the Bitcoin price correction at the end of last year, Strategy recorded an unrealized loss of approximately $17,440 million in digital assets in the fourth quarter of 2025. This marked one of the most severe single-quarter fluctuations in the company's history. But by the end of 2025, the book value of its Bitcoin holdings was still around $58,885 million, remaining at a historically high level.
Over the past 5 years, Bitcoin has experienced about 6 brutal drawdowns. If you roll the clock back 13 months, we were sitting at around 68,000. And then after the Trump election, we saw this incredible rally from 68 to 106,000 in just 5 weeks.
Despite the pressure of unrealized losses, Strategy still maintained its approach. In early 2026, the company raised $116 million via an ATM stock offering and increased holdings by 1,283 at an average cost of $90,391, expanding total Bitcoin holdings to 673,783, showing the company wasn't swayed by short-term volatility from its allocation strategy.
If you go back 14 months, we were at about 55,000. So if you said we were going to go from 55,000 to 94,000 in 14 months, that would have exceeded any reasonable investor's expectations. Over 5 years, Bitcoin is up about 50% a year on average for the 5 years.
No matter what, whether it's from the price logic, the narrative logic, or the entire future logic of Bitcoin, Michael Saylor cannot admit defeat. MicroStrategy cannot possibly sell a single Bitcoin. As soon as he sells, everyone who has ever invested money with him before would all pull out their investments, and MSCI would also remove it from its index components. So you see, in a bear market, there are all kinds of doubts and rumors. Whether MicroStrategy could be kicked out of the index company's ranks, such questions only arise during a bear market. Whenever the price goes up, blockchain is hailed as a revolution. Whenever the price drops, Bitcoin is called a scam again. So this market keeps reminding all participants that this is not a stable investment. It's a game of endurance and capital. It also requires long-term conviction, so calling it a high-stakes gamble is not really an exaggeration. So, at the very start of 2026, the first to make a move, it wasn't Bitcoin nor was it Ethereum, but rather those privately issued coins that are the most volatile and driven by sentiment. This shouldn't surprise anyone. If you look at the fourth quarter of last year, liquidity had dried up completely, and on top of that, macro factors and retail investor sentiment had hit rock bottom. So you can see that the market cap of meme coins dropped by 65% from its peak, and by December 19th, it had fallen to around $35 billion, becoming the market's most panic-stricken dumping ground. So when the new year started in January, did risk appetite begin to recover? The first reaction of capital was to test the waters with those high beta assets, to see if the market had really come back to life.
Judging from a combination of volume, price, and derivatives data, this round of meme coin rally is not just a short-term speculative play. The total market cap recovered from about $38 billion at the end of December 2025 to over $47.7 billion. Trading volume expanded from $2.17 billion to a peak of $8.7 billion. Mainstream meme coins like Doge, Shib, and Pepe all saw double-digit gains in a single week, with Pepe rising by more than 60%. More importantly, the open interest of most major tokens has risen simultaneously, indicating that new risk capital is entering the market, rather than the rally being driven solely by short covering.
Looking back, meme coins have always served as a kind of emotional barometer for the market. People start quietly pricing them to see how many risk takers are coming back in, but the side effects are also obvious. Volatility increases, leverage gets heavier, and layer upon layer of contracts are stacked on top of each other. When prices fall, they can also plummet rapidly. So what will the narrative around meme coins look like in 2026? Will everything become a meme? Are there any better meme coin investment targets? This weekend, we'll try to release a special segment to share our channel's perspective on what meme coins really are. I'll also recommend 2 meme tokens that you absolutely need to keep an eye on.
Crypto ETF staking unlocks new strategies. GitHub's 3-pronged layout is seeing explosive growth. Who will lead the industry's next big trend?
All right, let's take a look at ETFs. They're an indicator of overall macro capital flows. In particular, the Ethereum ETF is crucial. It affects the fate of all altcoins, right? Right now, Ethereum ETFs are expensive. Altogether, they total $18 billion. BlackRock's ETH1 alone has taken in $11.1 billion, which puts it in the top spot. Grayscale comes next, with its ETH holding $4 billion, and the mini version of the Ethereum Trust has reached $1.5 billion. So since these ETFs launched in July 2024 up to now, 2025 marks their first full year. They've absorbed $9.6 billion, which is a pretty fast growth rate. But what's the real bombshell? Recently, Grayscale directly issued the first on-chain dividend to all holders of its staked Ethereum ETF. What does this mean? It means that Ethereum ETFs can officially generate returns. This is the first time for any ETP.
Grayscale announced that ETE shareholders will receive a cash dividend of about 8 cents per share. The funds for the dividend come from the monetization of Ethereum staking rewards, and the dividend will be distributed on Tuesday. Eligibility is based on holdings at the close of trading on Monday. In fact, as early as October 6 last year, the company enabled staking for its Ethereum Mini Trust ETF. By working with institutional custodians and third-party validators to complete the staking process, it became one of the earliest spot crypto ETPs in the US to support Ethereum staking.
And today, the Grayscale Ethereum Staking ETF became the first spot Ethereum ETP in the US to distribute staking rewards to shareholders. As of the market open, that represents more than $9.4 million in total staking rewards being distributed to investors.
Unlike directly distributing Ethereum, Grayscale chose to pay dividends in cash. The core reason is that its fund structure is not restricted by the Investment Company Act of 1940, thereby unlocking a pathway for staking rewards. However, the regulatory protections differ from those of traditional ETFs. Boosted by this positive news, ETH rose about 2% in early trading that day.
Although regulators have not yet explicitly stated that ETFs can offer staking rewards, Grayscale has already taken the lead and put money into users' pockets, distributing the funds to users and leaving it up to them to decide whether this should be approved. So, it's easy to imagine that 21 shares, Fidelity and even BlackRock, who registered their companies as early as October 2024, are just waiting for the green light to offer staking rewards. But if the industry giant, with over $10 billion, were to stake all of these assets into Ethereum, in the future, a lot of capital will chase after Ethereum's staking rewards. If Ethereum's price rises to 6,000 or 7,000, wouldn't that be a breeze? All right, let's take a look at the annual report for 2025, recently released by the exchange Gate, and see what impressions it gives. Gate really is on a roll. Their user numbers are heading straight for 50 million, and both their futures and spot trading volumes are rising together. Now, Gate is no longer relying on scaling up for growth, but instead is continuously delivering value through its user base, liquidity, and system capabilities. According to CoinDesk's monthly report, how does Gate's trading data look? Gate's annual market share has impressively increased by 1.78%, and now it's surged to the second place globally. Their spot trading volume reached $160 billion in a single month, accounting for 6.4% of the global market. As for futures, it's even more impressive. Gate has captured 10.6% of the global market share. In 2025, Gate is definitely a dark horse.
Beyond its trading homepage, Gate's business landscape has developed multiple pillars of support. Gate Earn added 305 new projects throughout the year. Reinvested projects exceeded 1,000, totaling over $41 billion. Options business ranked global top 5, daily trading volume exceeding $1 billion.
We don't want to just follow all the other competitors or other teams. We want to do our own thing. We love innovation. We love new technology. So, that's how we survive in this industry. We provide good service and a great user experience, but at the same time, we have to think about the next step. We need to consider what we can offer in the future.
We scaled up with products like GitHub DX, achieving total transactions exceeding 25 billion. GateLayer, our Layer 2 network, surpassed 100 million on-chain addresses. Monthly transactions hit tens of millions, showing strong, high-frequency processing. For security and compliance, as of last October, the platform's reserve fund was 11.676 billion, with a 124% reserve ratio. We cover nearly 500 assets and completed compliance across multiple jurisdictions.
Let's take a look at last year's exchange rankings. The path has completely diverged. Binance is still the leader, firmly holding a 38% market share. Now, Binance is eyeing the US market, thinking about how to win back American users, and has simply floored the gas pedal on Web3. For its 12th anniversary, Git changed its UI and is now called Git.com, with the Chinese name set as Damen, the Gate. They even brought in top-tier IPs like Red Bull F1 and Inter Milan to join the fun. Do you all remember Secret Talk? This is, so far, the highest quality talk show in the crypto space sponsored by Git. So why invest such high cost to produce a niche talk show in the crypto industry? The idea was very clear. If we're going to put something out, it has to be top quality. So our fans, I'm talking about our YouTube followers, it took us 6 years to grow from 0 to 100,000, but it only took a few months to go from 100,000 to 200,000. Of course, aside from the few things we did right, the traffic from Secret Talk played a huge role. We finally made the bosses at YouTube notice a crypto channel with real substance.
When we interviewed founder Vitalik Buterin, he made it clear, Ethereum isn't here to compete on efficiency, it's here to give people freedom. This old saying has been debated for years, but looking at it now, it feels even more poignant. Coinbase CEO Brian Armstrong came out to clarify, saying he never claimed that prediction markets must rely on insider information. His words were just edited into an extreme version by someone. This is a classic case of taking things out of context. Data shows that the amount of money hacked last December dropped significantly down to about $76 million, which is a 60% decrease from November, the sharpest drop of the year. But don't celebrate too soon. There were still about 26 major hacking incidents in just 1 month. The work isn't over yet. On Holy Market, opinions about Bitcoin in January are divided. There's about a 50-50 split on whether it'll break $100,000, but people are more confident about it reaching $95,000. The chances of it dropping to $85,000 or even $80,000 are clearly much lower. The CEO of the Holograph Foundation, Sandeep Nailwal, made a statement. Polygon transaction fees have entered an acceleration phase, with about 1 million tokens being burned every day over the past 3 or 4 days. The more it's used, the faster it burns.
Now let me tell you something. In a bull market, do you ever get the illusion that you're some kind of genius? Like no matter what you buy, it goes up. You can go all in with your eyes closed and still make money. You start saying things like, if it doesn't go up 100 times, I'm not selling. You feel like you're the chosen one, that your knowledge can crush everyone else, right? But have you ever thought about whether the money you're making is from your own skill or just from the market cycle? When the bear market comes and the tide goes out, it becomes obvious who's been swimming naked. Those so-called brilliant moves you made before, don't they look like you were just buying at the top now? The ones who used to talk about holding for the long term, aren't they all stuck at the bottom now? And those who wanted to buy the dip, aren't they trapped halfway down the mountain? So, all those so-called geniuses who were just lifted by the cycle get ruthlessly weeded out by the bear market. That's just how the crypto world is. In a bull market, even the kitchen god and the bear become pig-hearted. Are you really earning money from your own insight or just riding the wave of the cycle? Once the bear market passes, the difference becomes crystal clear. If you get what I mean, give this a like. All right, that's all for today's show. We help you sort through the news every day. Here, we've organized member benefits for you. On Thursdays, there are special member-only live streams, and on Mondays, we provide weekly market trend analysis. If you don't want to miss out on all the gains from this bull market, becoming a member is definitely worth considering. Let's get rich together, step by step. See you next time. This is Ming Yu.